In this video, we're going to look at preparing the budgeted income statement. As we can see here, the format of the budgeted income statement is the same as the actual report. The only difference here is in the title, where we write budgeted income statement for the period. To prepare the budgeted income statement, we'll need to determine the revenues and expenses to be reported. To do this, we'll need to use the information provided, given to us either with the amounts or the percentages. Also, we may need to do an account reconstruction to determine the revenues or expenses that need to be reported. For example, we may need to reconstruct the prepaid advertising account to work out the advertising expense that has been incurred for the period. Let us have a look at an example of an account reconstruction. Here we've been given the prepaid advertising opening balance, which is the balance on the 30th of June, as well as the expected closing balance on the 30th of September. We're also told that on the 1st of August, the business is expecting to prepay advertising for 3 months, totaling to $1,500 plus GST. We need to reconstruct the prepaid advertising account to calculate the expected advertising expense to be incurred in the quarter ending 30th of September. Looking at the prepaid advertising account here, we can see that there's a missing entry, and that entry relates to the balance day adjustment that's usually necessary to recognize the expense that has been incurred, or in this case here, expected to be incurred in a particular period. This also happens to be the instruction that we've been given, and that is to determine the expected advertising expense incurred for the quarter ending 30th of September. So thinking about this balance day adjustment here, the entry would be typically a debit to the advertising expense because we are recognizing the expense for the period, and it would be a credit to the prepaid advertising account to recognize the portion of the prepaid expense that has been incurred. So on this basis, in the prepaid advertising account, we're expecting the missing figure to sit right here in the credit side with the cross-reference advertising expense. And in the advertising expense account, we're expecting the corresponding entry to be right here on the debit side with the cross-reference prepaid advertising. And this would be recorded on the last day, and that would be 30th of September. We're now going to find the missing figure here. And to do this, we're going to add up the amounts on the debit and the credit side as it is. So on the debit side, we have 2,005 plus 1,005, and that gives us a total of 4,000. And on the credit side, we currently have only 3,001. Since 4,000 is the larger amount, we put that into the total lines. The next thing that we do is to find the missing figure on the credit side, and to do this, we take 400 less 3,001, and that gives us a missing figure of $900. This also gets written on the debit side in the advertising expense, and this represents the advertising that has been incurred in the quarter ending 30th of September, and the total amount incurred is $900. In the budgeted income statement for the quarter ending 30th of September, we report the total advertising expense incurred, and that's $900. Here's a suggestion on how you can practice the account reconstruction skill.